Hello everyone, welcome back to the channel. Today, we're diving into Faraday Future latest development. They recently released their definitive 14A, and there's a lot to unpack. We'll explore what this document reveals, the likely next steps, and the worst-case scenario for the company. But before we dive in, make sure to hit that thumbs up and subscribe for more updates. Let's get right to it. For those who've been following my recent videos, I've been predicting that Faraday Future would drop this documentation after hours on a Friday. Companies often release negative news after hours to minimize the immediate impact. So, it's no surprise that Faraday chose this timing. Despite the anticipation, the stock is still down after hours. Now, let's delve into the key details. Faraday has announced the date for their shareholder meeting, July 31st, 2024. This meeting will address 6 proposed items, 3 of which are particularly significant. Shareholders must have held stock as of June 21st to vote, so recent buyers are out of luck. Conversely, if you sold your stock after this date, you still have voting rights. While some investors scrutinize director histories, I don't see this as a major issue given Faraday's current situation. However, if you're interested in the backgrounds of these directors, feel free to dive deeper. This proposal follows news from a couple of weeks ago that raised some eyebrows. If you're curious about the context, check out my previous video. Essentially, this proposal is about formalizing the appointment of a new accounting firm. This is a hot topic. Faraday wants to raise their authorized shares from 463 million to 4.1 billion. The timing and manner of this increase are crucial. The order of actions taken by management will significantly impact the company future. This proposal is vital for Faraday compliance with NASDAQ requirements. If they don't approve a reverse stock split, NASDAQ can delist them. The proposed ratio ranges from 1 to 2 to 1 to 40. Given the urgency, I believe they will opt for a higher ratio. Faraday wants to add 88 million shares for the 2021 stock incentive plan. This plan aims to retain employees, which is crucial. However, the timing of issuing these shares is key to minimizing potential damage. If Faraday doesn't get the votes they need for key proposals, they can adjourn the meeting. This gives them time to regroup and potentially change the votes. Now, let's discuss why I have an issue with the July 31st meeting date. NASDAQ requires compliance by August 31st. With 10 to 20 consecutive trading days above $1. Subtracting 20 business days from August 31st lands us around August 2nd, which is a critical date. If Faraday doesn't get approval for the reverse stock split on July 31st, they have a very narrow window to call another meeting and change votes. Faraday should increase authorized shares first, then proceed with the reverse stock split. This would reduce the authorized share count proportionally. Afterward, they can issue shares for the incentive plan and finally handle any dilution. This sequence minimizes damage. If management issues shares for the incentive plan before the reverse stock split, it magnifies the damage. Following this with the reverse stock split and then increasing authorized shares would allow for extensive dilution. This sequence is detrimental to shareholders. Ultimately, the trust in Faraday management will be tested. Their reasoning for increasing authorized shares includes a potential merger with a UAE entity, though this seems questionable. Keep an eye on these developments and let me know your thoughts in the comments. Thanks for watching, and remember to like and subscribe for more updates on Faraday and other EV companies. See you in the next video.